We start with the jobs market, where soft data are holding the Federal Reserve back from cutting rates more and cutting them faster. Steve Rattner is chair and CEO of Willett Advisors, which manages the personal and philanthropic money of Michael Bloomberg, our founder and majority shareholder. Steve has been watching the U.S. economy closely as an investor and gave us his outlook. Steve, the labor market is really top and center. We got a prior problem before we get to the state of the labor union, which is what are the numbers because of the government shutdown. Why are we shutting down the government?
Whether it's the right strategy or not, I don't know, but there's a legitimate purpose in what the Democrats are trying to do, which is health care. What most people don't understand is that in Trump 1.0, Trump tried to kill Obamacare overtly, through the front door, so to speak, and then John McCain famously voted it down. This time around, you've not heard them talk about Obamacare or the ACA or any of this stuff, but the fact is they've been trying to kill health care. There's a lot of stuff in the One Big Beautiful Bill, but there's also this provision that would expire at the end of the year that provides what are called enhanced premium tax credits to people making less than $150,000 a year, and particularly those making less than $65,000 a year, that are going to expire at the end of this year. This would cost millions of Americans their health care, and it would raise premiums by 18% for as many as 20 million Americans who buy their insurance on the exchanges.
As soon as you say, what is enhanced premium tax credit, you sort of lose me, because nobody is sort of saying, should we do away with Obamacare or not?
Well, that's exactly their strategy, and the Democrats keep saying this is about health care, but I don't think the average American really understands about health care. There are 20-some-odd million, 22 million Americans who buy their insurance on the exchanges. The insurance companies have already filed premium requests for next year. They have to do it by October 1st, and they're asking for an average of an 18% increase in premiums for people who buy that insurance because they expect so many people to drop out because of the loss of these credits that they raised. So people are going to find this out now. Now, you remember that the Medicaid cuts don't take effect till after the midterms. This takes effect now. And so people may not appreciate it today and support the Democrats for that reason, but by the end of this year, they're going to find out what this all means.
So let's turn to the question of the labor market overall. You follow this closely. Where is it? Is it as soft as some people think right now?
It's what people call a no hire, no fire labor market. It's kind of frozen. We saw in the ADP numbers this week, which are one indicator. They only show you the private side of the market, but they're sophisticated numbers and no reason to doubt them, that hiring has really, now I think for two reasons. One is uncertainty about the economy and tariffs and all the things we've been talking about for so long. And the other potentially is AI. We know that AI is going to have a major effect. You saw Doug McMillon of Walmart this week, for example. He has said privately to people that he thinks of his 2.1 or 2.2 million people, he might have 1 million people working 5 years down the road or something like that. It's going to have a major effect on our country, ultimately, I think, for the better, but with a lot of disruption along the way, and I think we're beginning to see those signs.
If the labor markets are slowing at whatever rate, what does that tell the Fed? Because given the reasons they're slowing, do short-term interest rates have any effect on that?
Well, in theory, they do. It takes a while. It's not the most direct transmission mechanism, but obviously, if you lower the cost of capital, business goes out and borrows more, spends more. It's good for the stock market, as we have seen. That creates a wealth effect. People who have stocks spend more, and that's the whole essence of monetary policy. But what I thought you were going to ask me, if you don't mind my saying, is that, as Powell said in his last press conference, the problem he has at the moment is he has to worry about both sides of his mandate. Usually he has to worry about unemployment or inflation. Right now he has to worry about both. We're not really in stagflation yet, but we have bits of that on both sides of the mandate. I think the one thing that may be hiding in all this is, again, AI. AI has the potential, and Trump, of course, did nothing to enhance AI particularly, other than doing a lot of press conferences with Sam Altman and whatnot. But AI has the potential to be a game changer. If we can raise our productivity rate by 0.5 percentage point or a percentage point, it would have a dramatic effect on growth. It would allow for more growth without more inflation. I think that if the Fed were to follow what Trump and Myron want and cut interest rates by 200 basis points, you'd see a fair amount of inflation. And right now we're not even at 2%, as we both know.
President Trump came to office promising to help an industry you know well. You helped restructure it under President Obama, the auto industry. What has been the net effect of the various policies?
I think if you talk to auto executives, and some of them have said this more or less publicly, some have said it more privately, I don't think really much of anything good has come out of this. And the stock market, if you look at the share prices, would agree with that. Much of anything good has come out of this for the auto industry. I think Mary Barra of GM has been reasonably candid about the challenges it poses for them. As Jim Farley of Ford has pointed out, GM imports more of its cars from Mexico and Canada than Ford does, so that is a problem for them. The taxes on the import taxes on auto parts is a huge problem for them, but also these stop-start policies on electrification and CAFE standards and so on, where you go from one administration to the other and you're trying to make 5-year capital plans and product plans, and then suddenly there's a U-turn in policies. That's not good for them.
You pointed something that is really striking. On the one hand, the expiration this week of the EV tax credits. On the other hand, the CAFE standards. So on sort of giving on the one hand and taking away on the other hand. So net, is that going to help the auto industry?
Well, but what those two things do is it drives, no pun intended, the auto industry from producing small electric or very fuel-efficient cars to producing larger cars that are less fuel-efficient. So then they have to retool and reorganize all their production plans. And sure, maybe if those policies stay in place indefinitely, it would be good for them. Bigger cars tend to have higher profit margins. They're easier for us to compete against the foreign cars that are where they can make smaller cars more efficiently, and so on and so forth. But we will have another president in 3 years, and this may all change again. And so it's not really great for American prosperity and capitalism to have these kind of stop-start policies. I think the government does have an important role in policy where there are what they call externalities, where there are effects of what a private actor does that aren't captured in the price mechanism in the market. And emissions and climate are the best example of that. That if you just let auto companies make whatever they want, you didn't have CAFE standards, you didn't have EV tax credits and so forth, we'd have bigger polluting cars. But if I were God, I would have done this very differently. I would have done it using the tax system, big tax on gasoline, things like that, to incentivize people and companies to move in the right direction. Not these sort of very jerry-rigged, complicated, on-again, off-again regulatory policies. Well, why do we do it this way? Because consumers don't see it. They don't see the costs of CAFE standards. It's not part of the American culture.
To come full circle, what do these policies and policy changes mean for employment in the auto industry, including the parts business?
Well, let's just step back. I think not just the policies, but the auto industry, and I did spend some time in the auto industry, has some really significant challenges. When you look at what the Chinese are doing, and yes, we have huge tariffs on their cars, so they don't come here at the moment, but when you look at what they're able to do and the prices at which they're able to produce and sell cars efficiently and how good the cars have become, they didn't know how to make cars for a long time. We kind of taught them how to make cars. At the wage rates we pay, with the other cost structure that we have in this country, it would be very tough for us to compete on a completely level playing field. So the question then becomes, how much protectionism, if you will, do you want to afford our auto industry, because we think it's important to have an auto industry?
If you talk to auto executives, as I know you do, they say it's not a completely level playing field. Can we out-innovate China to be able to overcome whatever subsidies are being given?
I think even if we gave the subsidies, I think you'd find that the Chinese can produce better, cheaper cars than we can. I think their innovation is exceptional. I think their costs of production is exceptional.
One of the advantages China has is a very large domestic market. Are we seeing sort of an epochal change, actually, from a world in which the United States was really a leader in auto production to one where we're not going to be? We're going to be the equivalent of a Europe.
Well, I think we'll be somewhere in between. I think Europe's car industry has had many, many struggles, and to the extent they've been successful, it's heavily been the German luxury cars exporting to China, ironically. But yeah, look, China does have, as you say, 1.3 billion people, and they're increasingly prosperous and able to buy cars. You know, over 50% of the cars sold in China now are EVs. I mean, they are in a whole nother world compared to us in the transition away from internal combustion engines into electrification.